the upside.
All right, Mitesh, thanks a lot for that. Let's get back to the big Adani Hindenburg tussle. Well, just a while back, the Adani management clarified to CNBC TV 18 that the FPO is well on track. The report is completely unsubstantiated, and they gave us key numbers in what the exposure the Adani Group has to the Indian banking system, which is around a little over 20%. Nimesh and Surbi, my colleagues, are here to bring you the latest on what both sides have to say. Nimesh, first, let me hop across to you. The Adani Group CFO came on our channel and clarified quite a bit. What were the key takeaways?
Hi, Sonia. So there are three key big takeaways from what we understand at the interview that Robbie Singh gave to CNBC TV 18. The first one is on the Adani Enterprise FPO, and that's going to be a big focus talk because of the FPO ending tomorrow, which is 31st of January. Now, for the FPO, the management very clearly clarified that they're going ahead with the schedule as well as the price band. So no change in the price band, nor there is a change in the schedule as well. They're very confident about the subscription in the FPO, and they're very clear that the bankers and the shareholders are quite confident that there will be a lot of demand as far as the FPO is concerned. Remember, the FPO closes tomorrow, and the price band is between 3112 to 3276. The anchor investor came in at 3276. So that is a big clarification that they are not changing any plans as far as the FPO is concerned, and they are very confident that there will be enough subscription. So that's the first part. The second one was on the group debt. That was again very important as far as the banks are concerned. Remember, last week the Nifty Bank collapsed 6% in 2 days on the concerns of the debt. Overall, the CFO very clearly clarified that the overall group debt is around $30 billion, out of which $4 billion is the cash that they hold. Now, as far as Indian banking is concerned, the overall debt exposure of the Indian banking is just 23%, which works out to $6 billion. And if you add the top up, then it works out to $9 billion, which means around 72,000 crores for the entire Indian banking sector. So even that is not very large compared to the book size of the Indian PSU bank. So that was another important clarification as far as the exposure of Adani group level debt to the Indian banks. And the last one was on Ambuja Cement. There was a lot of fears about the pledge shares getting sold of Ambuja Cement. Remember, the promoters bought the stake in the overseas entity, and for that they have pledged the 62% what the Adani promoters own in Ambuja Cement. The CFO very clearly clarified that because of the Indian regulation, it has been considered as incumbent, but there is no shares with the foreign lenders that they can sell in Ambuja Cement. So three big takeaways: the FNO is on track, the FPO is on track, and they're very confident. On debt, the India exposure is just 23% of overall debt, which is around $9 billion. And on Ambuja Cement, there are no fears of any incumbent or any pledges getting sold by the foreign investors.
Okay, in fact, very important clarifications coming there from the group. Thanks, Nimesh, for that. Let's listen in to what the group CFO of the Adani Enterprises had to say on the SEBI probe, of course, the Hindenburg report, and the fact that the FPO will go through as scheduled. Listen in.
We are confident that on the institutional side, that the entire issue is from based on our discussion, roadshow meetings, etc., will be fully subscribed. And that's why we clarified the rumors were going on. So we clarified on Saturday night that that the FPO will proceed on current pricing and on the current timelines. So we are supremely confident that from an institutional perspective, we are there. But there will be some pullback in the retail given such this in the pricing differential and the volatility. FPO will go ahead on the same conditions that we launched. Gross aggregate debt position in the group is just about 30 billion, of which $4 billion we hold in cash, approximately. Just under $4 billion we hold in cash. Because the way the domestic bank is, there was some sanction limit. So if I just go that on a sanction basis, it will be about 9 billion. The first thing is that 0% of Ambuja shares are pledged. What happens is that under SEBI's regulation, SEBI just has a heavier regulation, which is a good regulation, which is simply that please report encumbrance. So if we say that we will hold 63% under SEBI strict reading of it is considered encumbrance.
Okay, that's Adani's response, but the back and forth continue. The tussle is on. Hindenburg has come out with another response post Adani Group's clarifications. Surbi has the latest on that. Surbi, over to you.
Hi, Sonia. Well, Hindenburg is not buying any of the clarifications that have come in from the Adani Group. I'm just going through some of the most important extracts from their response that came in this morning. To start off with, Hindenburg is completely refuting allegations that were made by the Adani Group that the Hindenburg report committed, and I quote, flagrant breach of applicable securities and foreign exchange laws. So this, they're saying, is absolutely baseless, and they categorically deny this. Hindenburg goes on to say that out of the 88 questions that they had posed, 62 remain unanswered in the Adani response. And out of the remaining questions, the group has largely confirmed or attempted to sidestep our findings. I'll just get to the heart of the matter, and I think one of the most serious allegations that have been raised in this report is quote-unquote alleged related party transactions between Vinod Adani and the Adani Group. Now, this is something that Hindenburg says has not been adequately addressed in Adani's response. Let me just quote again from this letter. We asked about the source of the billions of US dollars that have flowed from Vinod Adani associated offshore shell entities through the Adani Group. Adani's defense, we are neither aware nor required to be aware of their source of funds. And this, Hindenburg is saying, is absolutely not satisfactory. Hindenburg goes on to say in its response, and I quote, "We believe investors should regard Vinod Adani as a related party." So there's a huge dispute over this one aspect. Then the Hindenburg response this morning goes on to say that the Adanis have not clarified their association or their relationship with the Chinese national Chang Chung-ling, and they go on to allege that this national has some role to play in the Augusta Westland scandal, and this continues to be a gray area, and they are at least not satisfied with the responses that the Adani Group has given. The final conclusion really is Adani's response largely confirmed our findings and ignored our key questions. So the battle of words continues between, I guess, the two entities.
Okay, well, thanks a lot for that. So it's a tussle back and forth from the two entities. Nimesh, Surbi, thanks for that. Let's slip into a quick break. We have dealt at length on the Adani issue and on the results, but the budget is only a few days away. I mean, it's the penultimate day in any case before the union budget. So after the break, we go full tilt on what to expect. Lata will be here. She has her Economist Roundtable coming up in just a bit. A. Prasanna of ICICI Securities, Soumya Kanti Ghosh of SBI will be joining